Hello guys, my name is Amand and I am going to explain a little bit how I solve this problem. And this is my very first time to record a video. I am sure I'm going to struggle a little bit, but at the same time make sure that I'll do my best to present this video, this tutorial. So what I can say is my tutorial today is going to base or to explain how to adjust, okay, journal entries for 5 separate situations that occur at the end of an accounting period. So these entries are essential to comply with the accrual basics of accounting and to ensure that financial statements are accurate and complete. So that being said, I'll go straight to the first case that I have to discuss, I have to solve. So here the scenario is that equipment has depreciated or has depreciation of 5,900 for the year. And the type of adjustment that we need to talk about here is depreciation. It's called depreciation. So that being said, on the general journal, we are going to look for the depreciation expenses and accumulated depreciation. So in this case, since the whole year reported that 5,900 is what has been reported, sorry. So depreciation expenses is going to be debited 5,900 and accumulated depreciation is going to be credited 5,900. So on the second case, which I'm going to talk about, we talk about the insurance. Okay, it's called prepaid insurance. So on the prepaid insurance, we have a balance of 2,900 and on expired amount of $1,050. So this to do a quick calculation, when you do the subtraction here, you are going to have $1,850 as expired. So to enter this into our general journal, we are going to find insurance expenses and prepared insurance. So the insurance expense is going to be on debit, $1,850, and the prepared insurance is going to be on credit at the same amount. And on our next case, who's going to talk about unearned revenue. Here we have an unearned revenue or consulting work. So the consulting work here is that the company has received 5,700 in advance of a work that they normally supposed to do. And from this work, one third has been completed. So we are going to do a mathematic. When we are going to have 5,700 times one third, and the result that we are going to get is going to be 1,900. That's why we have that 1,900. That's why we have 1,900 here. So on our general journal, we are going to find and earn revenue, and that this is going to be on debit. We are going to put 1,900 on debit, and service revenue is going to be 1,900 as well. So move on to our next case. Here we are going to talk about um, accrual wages. Okay, here the wages, we have incur but unpaid wages of $2,100. So the type of adjustment that we need to have here is called accrued expenses, and the adjustment entry, we are going to find wages expenses and wages payable, where we are going to put uh, the same amount. Wages expenses is going to be on debit, and wages payable is going to be on credit, and the amount is $2,100. In our last case, we are going to talk about interest revenue. Okay, so as of the 31st of December, the company has earned but not yet recorded 490 of interest revenue from investments in socially responsible bonds. The interest revenue is expected to be received on January 12. So this is has been received, has been earned but not been recorded. So the amount is $490. The interest receivable here is $490, and the interest revenue here is going to be $490 as well. The interest receivable is going to be on debit, and the interest um revenue is going to be on credit. So this is what I've worked on. Hopefully I've helped. If there's any question that you would like to ask, I'll be glad to answer. And I'll also be glad to have some recommendations about the video. Thank you so much, and open to have your feedback.